This is the Investing News Network. I'm Georgia Williams, and today we have a little holiday treat for you. An excerpt from a December 4th interview with Lobo Tiggre of the Independent Speculator, where we discuss the uranium market trends of 2025 and where the energy fuel is poised to go in 2026. Looking back at 2025, what were the key drivers of uranium's price moves, and how would you characterize the market now?
Well, the real market is the long-term contract price.
Right.
Uranium bulls will tell you that. And I think it's a fair characterization. I mean, that's, actual buyers, sellers, users, suppliers exchanging and what it takes to get a miner to sell his or her uranium and, what the actual user is willing to buy. And I'm not digressing. That really matters, though, because that, the real market, though, is not transparent. Right. We only find out afterwards. And then, you have to do some sleuthing. They don't disclose the individual contracts, just here's what we paid on average for the last quarter or something like that. Right. So it's messy. And that means that we have the more convenient number, the spot price, which is the less accurate number.
Right.
And the one that gets hunted around more by people doing crazy things. So the real answer, the real market is kind of the boring answer, is that it's been, going up, pausing, consolidating, going up. The real market is having a good year, and it has risen to a price level that, with inflation, mining cost inflation, which is much, much higher than general inflation. The cost increases we've seen in all kinds of mining over the last years, really since COVID. COVID kicked mining in the posterior really hard.
Right. I
mean, like 20%, 50% cost increases in tires, and the only thing that's down is fuel lately. But the long-term contract price has been rising. It is at a level that clearly does incent production. Right. We've had Cameco and Kazatomprom have both ramped back up again. They've both failed to hit their targets and have officially moved their goalposts. So now it looks like, everything's fine. But, don't forget, they did move those goalposts. Both of them, the biggest and lowest cost producers in the world, moved their goalposts, and that's significant. Mm-hmm. And it's bullish, right? So, the juniors that have rushed in, clearly the incentive is there for them to do so. But all of those are either late, completely off track, or didn't even get started. None of them have been able to say, we're going to build this or rehabilitate that and deliver on time, on schedule, and at the production levels as advertised.
Right.
So this is really significant to the status of the market, because I think it was a legitimate fear, say in 2024, when prices went up to triple digits and corrected. Mm-hmm. Right? It was a reasonable fear to say, high prices are going to cure high prices. There's, like OPEC, the uranium market was in voluntary supply cuts. Right. At the time. Both Kazatomprom and Cameco, the two big players, were voluntarily cutting supply. So it was reasonable to say, prices are way up, that supply is going to come back and people are going to build mines, and, maybe high prices cure high prices. So what we've seen now, the answer is, and over the course of 24 and 25 is, yes, the price was high enough to incent, but it turned out to be a lot harder to do, to pick that low-hanging fruit than anybody thought.
Right.
It was thorny fruit. So this is the ultimate answer here. It's like the experience we've had over the last 2 years tells us that the supply remains constrained. There was some question about whether or not, it was a legitimate question whether or not that would be the case, but it's clearly the case. Mm-hmm. It's very, very bullish going forward, at the same time that you don't need me to tell you that the demand side is just going nuts.
Right.
If it's not daily, it's at least weekly. We see some bullish headline. And it's not just BRICS countries building reactors like there's no tomorrow, which they are. Yeah. China wants to double its reactor fleet. But it's even, the United States, which is really interesting. Biden was also pro-nuclear. It got that green mantra. Yeah. And instead of, pretty much anything else that had Biden's name on it, Trump is undone. Right. But that's one he hasn't. He's doubled down on that. He's strongly pro-nuclear. So this is absolutely, I think, an idea whose time has come again.
Yeah.
The moral high ground coming to the uranium space is just an incredible 180 in this whole space. So the demand side could scarcely be stronger. And at the same time, the supply side has turned out to be much more difficult to address than the optimists imagined.
Right.
So I think that's the real market. That's the real world. Now, the spot price is volatile. It goes up and down. Say you are one of these producers or would-be producers that's trying to take advantage of high prices, and you bought uranium at $30 a pound or $50 a pound, and now you're building your mine. Well, now you need to cash in. You didn't buy that unless you're spot, right? You didn't buy that to hold it forever.
Right.
You bought that with the idea of selling it when prices were higher. And so, you never know when that happens until after the fact. So spot price vacillates. But the fundamentals are just super strong, and I'm very bullish.
Yeah, absolutely. And you brought up, the long-term contracting price, which is a better gauge of the market. We did see the spot price and long-term contract price converge twice in 2025, in June and September. Is this an indicator that the market is balancing? What does it say about the current cycle?
Well, spot often runs ahead of long-term contract. They always converge in the end, but they never stay the same. The market never, equilibrium is an economic concept that, only in ivory towers does that serve any useful purpose. In the real world, it's like rubber bands and chewing gum. It's mushy and they go back and forth, and the one slingshots ahead and falls behind. So I don't read too much into the spot price movements. There are weeks where the spot price is down at the same time. India announces new reactors or Ukraine announces a contract for 20 reactors. It makes no sense,
right?
Except that maybe what we don't know is UEC or Energy Fuels or somebody else just sold a whack of uranium that they bought cheap, and now they're cashing in to fund some project of theirs or something, right? We don't know that until afterwards. So it's really, I think, a bit of a fool's errand. No, not a bit. Let me not mince words. I think it is a fool's errand to try to read too much into spot. Okay. Other than that, it rises above, falls below, but it never deviates too far from the long-term contract price.
Right.
And when we go with that is, if spot is under long-term contract, that's an opportunity. Unless, as long as long-term contract keeps going up, if spot goes down and that puts the stocks on sale, that's an opportunity.
Right.
If spot goes way ahead of long-term contract, especially if it rolls over, it's going down, but spot is ignoring that, then that would be a signal to take profit. So in that sense, irrational exuberance or irrational pessimism can be opportunities one way or the other, long or short.
And governments have stepped up support this year. How significant has that been for the market's confidence? And what more could policy do to accelerate supply development and security?
It's obviously huge.
Yeah.
Uranium was a 4-letter word not too long ago. It was pretty much uninvestable, almost as bad as coal. It's interesting that coal is scarier than uranium in today's world.
Yeah.
Or tobacco or something, another 4-letter word. Right. So it really is huge. But it's not just like market psychology, though that is part of it. It's also market mechanics.
Yeah.
If you have funds that are structurally constrained to only invest in ESG, and now uranium is G, right? It's green.
Yeah.
So G is governance, I know, but I'm go with it here, right? So I think that's, mechanically it unlocks funds. Or like the taxonomy in Europe, for nuclear to be included in the green taxonomy over there, not only means that government funds can go there, but again, private funds, other institutions that rely on that permission slip,
right,
will invest accordingly. So it's material more than just psychologically. It matters to funds flows in the markets.
Right.
And, an industry that's been starved of funding for so long, to see that change, it's a real 180. it matters.
Absolutely. And, on that sort of vein, jurisdictional risk seems to be more prevalent than ever before the resort, across the resource sector. In New Orleans, Jennifer Shadjic said she's concerned about the nationalization of mines. We have seen this playing out in Niger regarding the Somaire mine just recently. Do you think mine nationalization is a threat to the uranium market?
Not really, not as such. I mean, there's resource nationalism,
right,
which is a more broader issue of, we need our own and we need to have our own production, that sort of thing. And these are our resources. We need a bigger stake of the pie if foreigners are going to mine it, that sort of thing. That's always and ever present. It's not a variable, it's a constant.
Right.
Actual nationalization is fairly rare. And even in Niger, there are arguably other political issues, anti-Western or anti-French sentiment play a role in these things.
Yeah.
And there's hotspots. Look at all the problems Barrick has had in Mali, and not just Barrick. So it's not specific to the uranium thing. It is political risk is something that you have to watch out for. I think everywhere as a resource investor. The world is waking up to the need for critical minerals, and that is pushing back on the NIMBY thinking.
Yeah.
But it's not like NIMBY thinking just goes away in a day.
Right.
And, even if you, as a green, pinch your nose and say, okay, we're going to mine uranium because we need this wonderful 24/7, 365 source of power to back up our windmills and solar panels. It doesn't mean you actually like it.
Right.
And you just as soon not do it if you could find a way to do without. And you want to do it as little as possible. So foot dragging, permitting issues, that's always going to be there. But flat out nationalization is, even in today's world, but even in Africa, it's actually not that common.
Right. Yeah. That's a good point. New mines take a decade or more to reach production. Given current price levels, permitting timelines, and capital constraints, do you think 2026 will see any new projects or shuttered projects coming online, or is the market still restrained by existing capacity?
Yes, no, and maybe. So the DASAs of the world and things like that, they're not going to take 10 years. The problem there is, what the problems there are.
Yeah.
Energy Fuels is working on bringing 3 mines back online. We've heard some progress on 2 of the 3, as far as I recall. The third one they don't talk about, which is not good. And the 2 of the 3, they've cut back their production guidance. They say things are going okay, but instead of 500,000 pounds, or it's like 100,000 pounds, I don't remember the exact numbers, right? But they too have moved the goalpost. So, it's, as memory serves, I haven't heard of anybody. I think the entire year in 24, people were restarting, refurbishing, dusting off, ramping up, all that. In 25, I don't think I've heard of anybody saying, okay, we're going to build this mine.
Yeah.
It was the stuff that was already started. So in the answer to your question is, we may see new mines announced, hit commercial, production, nameplate capacity, or maybe at a reduced capacity, but into commercial production, we may see several announcements. There are multiple projects in the works right now, but they've been in the works since 24.
Yeah.
So I don't know of any new ones. I may be wrong. Justin could probably tell you with much more precision exactly how many projects were announced in 25. But off the top of my head, I don't know of any.
Yeah, I don't think so either.
Yeah, so I think what we'll see is maybe completion of some of the projects already underway.
Right.
And that's a maybe. The foot dragging there is really quite significant.
Absolutely. And data centers are sort of one of these main cruxes of the uranium narrative moving forward. And we've seen the WNA put out reports every year that, we're not meeting the demand that there is now, the supply doesn't meet it. So where do we go when these data centers, start needing
I'm glad you brought that up. So we could probably do a whole interview on this, so much to say, but there's a couple of really important things. One is the fundamentals here, the demand for the uranium. And this isn't like, Doc in the Back to the Future movies who can pour a banana peel and a beer into the back of his Mr. Fusion and fly the car off, right? It's uranium. You can't substitute thorium. Maybe 10 years or 20 years from now, we will, but there's no thorium. There's no other unobtainium or anything else you can put in there. It has to be uranium.
Right.
And okay, fusion may replace all fission in the future, but that's
down the road.
Been 5 years in the future for the last 50 years, right?
Right.
So it's uranium. So, and you know this, I don't need to lecture you on this, but it's really important to keep in mind because there's a lot of storium out there about all these other things coming, and with the data centers and the AI. I just want to stress that the use case is baseload power has always been there.
Yeah.
And there's no substitution, and the world is building like gangbusters. Okay, so that's just there.
Mm-hmm.
On top of that, there's the electric cars.
Yeah.
And people say, "Oh, well, Trump just rolled back the CAFE standards. Sell energy, sell everything. People aren't going to need electric energy anymore because nobody's going to buy electric cars." Well, that's exactly the wrong idea from what I'm saying.
Yeah.
It's baseload power. It's keeping hospitals lit. Right, airports, and that's what you want your 24/7 baseload power for.
Mm-hmm.
So the EV story was a tailwind, and if it completely went away, it would not undo the thesis for uranium. It would remove a tailwind, not the base story.
Right.
And AIs are just like that, right? Okay. Now, in both cases, the EVs are not going away. It's a very U.S.-centric view to think that the EVs are going away.
Right.
I saw another headline that China is actually dumping gas-powered cars around the world because nobody in China wants them. They're all going electric.
Yeah.
And so now these people with these legacy cars, they got to get rid of them.
Yeah, exactly.
And Europe certainly hasn't given up on electric cars. They've doubled down.
Mm-hmm.
And if you thought that Europe was going to give up and go back to gas guzzlers, just look at it. COVID didn't make them do it. War with Russia didn't make them do it.
Yeah.
They're not going to do that. So it's a tailwind, but I really believe it's not going away.
Right.
And the same thing with the AI. Yes, AI hype. Yes, there's going to be a lot of companies going to blow up. I think there's a significant chance that we get a major market event based on the AI bubble popping.
Mm-hmm.
And there will be a lot of panic selling of everything related. And unfortunately, that's going to smack uranium too, because it has become an AI play. Now, like the EVs, though, that's a tailwind. It's not the base case.
Right.
Nobody should be investing on uranium just because, AI data centers are going to need nuclear power plants. I mean, even if that's true, those things are going to take 5-10 years to build, right?
Exactly.
But that's a forward-looking statement, on steroids.
Right.
So I think you understand what I'm saying. The base case here is absolutely solid.
Yes.
And if there's an EV tailwind that turns into a headwind for a while, then that's a creator of opportunities. If the AI bubble bursts, in some ways, I almost hope that it will, and it will smack everything down because I've already made a bunch of money. I've already taken up profits. I've booked some big wins.
Good.
And I'd like a chance to load up again, but I don't want to chase relatively high prices. Everything that I've told you, Georgia, I think is so obvious.
Yeah.
I mean, let's not say obvious. I'm not saying what we're doing is a waste of time. But let's say there's so much noise out there that the signal gets lost in the noise,
mm-hmm.
but it's there and people know it. And we know that they know it because the stock prices of the uranium companies have really not corrected that much.
Yeah.
There's been some wiggling and some pullback, but people have not decided, AI hype, I'm selling uranium in mass. That's just not happened yet. So the writing on the wall. It's clear. And that means there haven't been many great buying opportunities.
Yeah.
But so if the AI bubble really pops on Wall Street and people are throwing out babies with the bathwater, right? That could be a spectacular gift because it will mean nothing about the base case for uranium. And by the way, the data centers will still get built,
right,
even if the AI bubble pops. I almost kind of, I don't want to say I wish it would happen because a lot of people get hurt. But if it happens, I don't want to celebrate anybody else's pain, but I'll tell you, I will be gleefully in the market buying, because that would be, when the market puts something that you know is valuable, that you understand the thesis here and you want to be long, but you're resistant simply on the basis of price. Yeah. So when the market puts it on sale and you get that price and nothing has changed, everything else about you, that is an absolute gift. And it doesn't happen that often.
Yeah.
Fluctuations happen, but a big sale on something you absolutely want to own, and it's for completely the wrong reasons.
Right.
That's the stuff that makes fortunes for people with the courage of their convictions.
Yeah. It'll be like a Black Friday sale for uranium, I suppose.
A little less predictable, but yeah.
And heading into the new year, how should investors be positioned for 2026?
Well, I don't give advice. I can tell you that what I have been doing is I'm bullish on anything governments can't print as a class.
Okay.
But I'm cautious about ongoing Trump shock and the prices to be paid for the attempted retooling of the U.S. and global economy. And this isn't necessarily a pro or anti-Trump statement. If you're completely on board with everything Trump is trying to do and defend America from China and Russia or the world or whatever, fine. But understand that this is a big change.
Yeah.
To bring manufacturing back to the United States, to change the nature of the economy is a big change. And I may be wrong, but it's really hard for me to see something like that happening completely smoothly with no pain of adjustment. The Novocaine here might be the money helicopters or what Lynn Alden calls fiscal dominance, or Michael Howell, global liquidity. The governments are aware of this. And so far, there have been shocks to the economy throughout 2025. But apparently the liquidity, there's enough money in the air that the economy has been able to ride right on through without major, at least easily measurable pain. But I just can't quite bring myself to say, oh, all clear, just buy everything because everything's fine. So what I'm doing is I've taken substantial profits. I have not sold everything. I haven't gotten out of the market, but I've taken substantial profits to have, locked in my wins. Like as Rick Wills calls it, the point of no concern.
Right.
Speculating, look at the name, speculating, it's high risk.
Yeah.
And some stress always comes with a risk. So how great is that, to be able to be a speculator and not be able to lose money?
Amazing.
Right? Yeah. To play with the house's money. If you make enough money, you take enough profits that you can't lose.
Yeah.
And that's a fantastic thing. So that by itself is worth doing. But the big thing is to have cash in case you get that buying opportunity. Right. If the AI bubble pops, like we were talking about, it's not just going to be uranium, it's going to be everything.
Yeah.
And I remember some of the most agonized emails I got in 2008 were not from the people saying, oh, you bastard, you told me to buy this stock and it's down. People understood. Gold bugs in particular understood that sale price that we got in gold in 2008 and silver was a buying opportunity. But the pain was, I don't have any money left. Yeah. We saw this coming. I've been buying all the way down, and now I'm all in, and things are even cheaper than when I bought. And that really, people were just. It wasn't like hate mail exactly, but it was just like people crying in their beers, like this. Imagine having a once in a lifetime buying opportunity and having no cash, no money, no ability whatsoever to act on it. And you're right. And by the way, you were proved right within 2 months. By the end of 2008, gold was in black.
Yeah.
Right. Yeah. So that's the other reason for taking profits. It's not, he lacks conviction or he doesn't, Darth Silver or whatever they call me, right? It's great to be a speculator and not be able to lose, to be able to sleep well at night. And B, it's great to have the cash to put into the market if you get handed such an opportunity.
Absolutely.
I don't know who'll get that. I think there's a pretty good chance, and I'll be loaded for bear if that happens, if that bear shows up.
Yeah.
And that's great. And if not, I'll have money and I'll be able to rotate into other things.
Yes.
Specifically for me, that's gold, silver, copper, and uranium.
Yes.
Nothing else right now. And that depends on how things shake out. At some point, I expect to be going long oil and maybe some other metals and minerals. We'll see. But that depends on those specific markets as they evolve. But the things that I would buy the dip on right now, gold, silver, copper, uranium.
Fabulous. And, bringing up the point that you had mentioned about this retooling of the economy, like it very much feels like the reverse of globalization. And that took 30 years to sort of roll out all the way. So like you're saying, the transition back is going to be a bumpy road,
Yeah, I get hate when I say this, but my impression is that the slang terminology for what the Trump administration is trying to do is fake it until you make it.
Right.
Like talk about how we have the greatest economy ever, deny there's any pain, no matter what the lower leg of the case says.
Yeah.
Right. Everything's great. Everything's fine. Just keep believing, keep shopping, keep doing all that stuff. And if you can do that long enough for the tax cuts and the incentives and all these $20 trillion that Trump says that it's going to be invested, even the United States, $20 trillion invested would be a lot.
Absolutely.
Right? So if that really starts happening, it's not a fantasy that you can grow your way out of an economic, debt problem.
Right.
That can then happen. Even mainstream, even Keynesian economists, that's kind of what they like, prime the pump to grow your way out of the debt problem, right? So it's not that it can't happen. It's just that it's risky.
Yeah.
And if it fails, if you spend all this and you blow out the deficit, hoping to stimulate and grow your way out of the economy, and then you don't get the growth.
Yeah.
Well, then you've just made the situation worse.
Yeah.
So I don't know if any of this will make it into your story, but I want to stress that I'm not necessarily beating up on Trump. I'm not a huge, I don't have a MAGA hat. I'm not a huge Trump fan.
Right.
But if I had to choose with living under Trump or Xi or Putin, I'd choose Trump any day of the week.
Sure. Me too. Me too.
So don't get me wrong. But this transition, as you said, it's hard for me to see it being painless.
Yeah.
And even if the money helicopters smooth it all over and there's no recession or no real significant, broad-based recession, not this rolling recession, right? Or, we've had a manufacturing recession and a transportation recession. We had a commodity, we've had these bits of recession, but not an NBER recession.
Right.
Like if the easy money smooths that over and then we get the growth, but until that happens, I just think it's a mistake to say, "Oh, Trump's our guy, we got to back him," and ignore all the red flags, right? Yeah. Or just as much as it's a mistake to say, "Oh, I hate everything Trump is doing, therefore everything is going to go down the tubes." But, don't underestimate the power of those money helicopters.
Absolutely, and like they say, even a broke clock is right twice a day. So,
yeah. So, the long and short here is. I don't claim to know the future. You know this about me. I'm not in the prediction racket. I'm a due diligence guy.
Yes.
What people pay me for is to kick the rocks on the projects and that they trust me. They trust me to tell them the truth. They trust me that the companies are not paying me to say, and by the way, they don't even trust me to always be right. I'm fallible.
Right.
And I don't just mean about the predictions. I mean even about the companies. I can make mistakes, or I can think something looks bad and the stock goes up. That's not the promise. The promise is that it's independent due diligence. It's not paid for by the companies. I work for my clients and I apply all my experience and my team, all of our accumulated experience to trying to get our clients the best possible information. So, I don't know what's going to happen, and therefore I hedge my bets. Sure, I take some profits. It gives me cash to redeploy. Yeah. I cost average my way into my positions because you never know what's going to happen next.
Yeah, absolutely. Thank you so much for your time and all of your great insights. It's always a pleasure to speak with you.
Sure thing, George. I appreciate it.
Thank you very much, Lobo. Have a great afternoon. Those were some great uranium market insights from Lobo Tiggre. Thanks for tuning in. I'm Georgia Williams from the Investing News Network.